Today's top headlines across the world: economy, finance and technology as of November 15, 2025. World. Global markets are facing a bout of volatility after sharp tech stock sell-offs and concerns over economic growth in China. Major indexes in London and Europe fell, and although US markets recovered somewhat, investor sentiment remains fragile. In the UK, the government's sudden decision to abandon planned income tax hikes triggered a fall in the pound and a rise in long-term borrowing costs, raising doubts about the fiscal strategy ahead of the budget. Meanwhile, one of Europe's largest asset managers, DWS, warned of systemic risks if the US were to restrict access to dollar funding, noting that emerging markets especially could be vulnerable.
Economy and finance. Investor appetite for equities has cooled markedly. Global equity fund inflows plunged to just about $4.1 billion in the week to November 12, compared to over $22 billion the prior week. Much of this is linked to waning hopes for a rate cut by the Federal Reserve in December. Officials signaled less certainty on easing, which rattled markets. At the same time, private credit is evolving. With traditional cash flow-based lending slowing, lenders are increasingly turning to asset-backed financing, including IP rights, data centers and energy infrastructure, as the collateral side expands.
Technology. The tech sector is under pressure. The AI semiconductor theme, led by NVIDIA, is being scrutinized as investors question whether AI hype has driven valuations too high. NVIDIA's upcoming earnings report is seen as a key moment for the tech space overall. In more specific tech news, a company named SMX launched its operating system for physical materials across 6 countries on 3 continents, embedding molecular marking and persistent digital identities into plastics, metals, textiles and recycled inputs, a sign of how industry tech convergence is advancing.
Why it all matters. The fragile global market sentiment means that policy missteps or surprise data releases could trigger disproportionate reactions. The interest rate outlook is shifting. With less confidence in a Fed rate cut, borrowing costs, asset valuations and fund flows may pivot rather than continue on the assumed path. The tech sector's trajectory, especially in AI and semiconductors, may define market direction for the coming weeks. If key players like NVIDIA disappoint, it could cascade. The evolution in private credit and asset-backed lending signals a structural shift in how corporate finance is being done, with implications for risk, regulation and transparency.